Mr. Mark Selby, welcome back. How are you?
Good to see you, sir.
Yeah, well, you've been on planes and trains and automobiles, haven't you?
I have been.
Right.
Always.
Is it all top secret, or is it just meeting investors and the like?
Yes, I mean, again, there are very few joint venture investors or industrial partners based in Toronto. So it would make my life a lot easier if I didn't, could just travel around Toronto. But the unfortunate part is, it's Asia and Europe is where those companies reside. And to do business with them, you need to travel to Asia and Europe. So
You do. Right. Well, we're going to have a quick romp through this week and perhaps spend a little bit more time next week on some of the news, given that you've not had much time with your feet behind the desk at the moment. So we'll do a little bit of company news at the end. We're going to talk a little bit about what's going on with Canada Nickel, Chalice Resources, Poseidon Nickel, Nordic, and also a little private play in Brazil. But first, what's happening in the markets?
Yeah. So again, with the base metals have been playing catch up with the equities that tanked hard early on in this slowdown, and again seeing the base metals come off. Nickel's falling along with the rest of the complex. But I think one of the contrasts, everyone was as copper was heading 450 and towards $5 a pound back in March and April. You had a bunch of commodity analysts falling all over each other, but how awesome copper is, and we're going to run out, and blah 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 blah. The reality is this, since things have slowed down, we've seen nickel inventories basically continue to decrease, from a fairly low level, not any kind of a big decrease, but you're yet to see the kind of inventory pileups that you typically see in these kind of economic slowdowns, which again I think is supportive for when the market does turn, and it will turn. On the nickel price, we dropped back below $10 a pound, and so we're back to where we were in early 2021, which is about the same price level that most of the base metals are at. So yeah, no, we'll see what happens. Again, I think if you look in China, we talked about stainless prices, and they're heading down. NPI prices are heading down. Ore prices are heading down. Again, there's not a lot of volume. It really feels like the market's just basically in a big wait and see mode to kind of see where is this recession really going to come through? Where are prices going to bottom out? So I think we'll probably see a few more weeks of this, sort of testing the bottom to see where the market demand really comes back. And again, given that we're heading into August, which is traditionally a slow time, I'm not expecting much to happen. As I've said, it's always going to be more second half story and fourth quarter story this year, I think, in terms of nickel.
Okay, so in the context of the conversations we always have around, the EV thematic, et cetera, whether nickel and copper kind of feeds into that. I mean, how's copper playing at the moment?
Yeah, copper's basically busted down to, again, $3.50 a pound. So, as it was pushing 450 in the spring and people were falling all over each other to, kind of be the first to to come out with a 450 or 5 or even higher copper price. Again, I think people forget that copper scrap is relatively elastic. China does have some ability to convert copper resource that nowhere else in the world would mine, but they're able to turn it into some amount of production. So we'll see how that plays out through the balance of the year.
Well, okay. I mean, talking EV, let's stick with this one because here's some data which I can't believe. You try and work out, buying behavior, investor behavior, and this one's kind of leapt off the page for me. EV sales up 55% year over year at 8.4 million per annum run rate. I mean, aren't we in some kind of economic dip at the moment? Aren't we in a recession in all but name? Why are people spending money?
Oh, yeah, we're on the verge. Don't forget, we're on the verge of a world war. Most of China was locked down some key parts of China were locked down during April and May, but somehow people were able to get to the shop and order some EVs. Yeah, 3 million in 2021, 6 million in 3 million in 2020, 6 million in 2021, and we're already at this kind of 8 million run rate. Again, for me, this is really what's going to drive the back end of the story is this kind of, real run rate growth in EV demand. And by the end of this year, really continuing to push forward, which again, for the battery metals, I think are going to, help support them / move them back higher if we've come off at any point in time. I really do think this is going to be a typical recession for the most of the global economy, and then going to be a pretty V-shaped recession for people in the battery materials sector, just because there's so much underlying demand. Just as a data point on a regular car, my parents' car, we had massive storm in Toronto in Canada in late May, and my parents' car got damaged. Their insurance company gave them more money than they paid for their car 2 years ago. Just because the market price for the car, it was a market price replacement, had gone up, since they had it. And again, in and amongst these EV type sales stories, you see car companies already who said we're basically sold out for 2022. And people are thinking, well, I'll buy one, but I'm not going to wait 9, 10, 12 months for a car to show up. So that's where, again, I think if there's any kind of slowdown, there's just a massive amount of pent up demand that I think is just going to continue to propel the story for the next 18, 24 months.
Okay, well, we all know that nickel's more than just about the EV thematic coming through. There's a massive stainless steel market, which it feeds into overwhelmingly. But it's kind of quite amusing in a way that people are going out and buying EV cars in record numbers year over year over year at the moment, but they're not either buying stuff, but then they're not buying the stuff that makes the stuff. Right, so they're not buying the equities in the metals companies, the mining companies, which makes the stuff that people are buying. I mean, the clues are all there. So, I mean, what do you say to that?
Oh no, it's again, this is the parallels with China are in the early 2000s are entirely remarkable. Again, for those of us who understood what China's growth could mean, and talking about 10x growth in 6 or 7 years, and people, oh, that's not possible. And you go through a few cycles during that time frame where, the equity market for materials, basically goes almost back to where it was at the depth of, a multi-decade recession in 2001. And you kind of shake your head and go, okay, China needs all these metals. The same thing with the EV market right now. If this for the EV supply chain, they have to be, use a politically appropriate term, like in terms of the entire chain now is going to go through 12 to 18 months where we're not going to be able, a lot of juniors aren't going to be able to raise the capital they want to do the exploration and development, want to be able to get the projects that we're going to need, by the second half of this decade. And it's just pushing. We're way behind the curve already in terms of being able to provide the supply. We're just going to end up another 12 to 18 months behind the curve. So again, for those of us who've been able to raise the money and are continuing to advance projects, it just helps our story relatively, that much more. Although you would not see it reflected in our share price today.
Maybe your parents were just buying a car as a investment class, which we hadn't thought of. I like that story. Getting more for it than they paid 2 years ago. Because historically it's been a case of it depreciates by 40% as soon as it goes out the car showroom, right?
Oh yeah,
now
100%. Yeah,
back up. I mean, and just on something I referenced earlier, which is obviously the nickel market has a little bit of optionality, as does copper. It's not all about the EV thematic. I mean, that's the exciting, sexy bit of the story. But the truth is, there's big industries which rely on nickel, or which rely on copper, big infrastructure programs, which need everything. So, what is the non-EV share at the moment?
Yeah. Oh, so in terms of nickel demand, it's still over 85% is still its traditional uses and stainless steel, in various alloys, and again with the resurgence in oil and gas, there's a whole series of nickel alloys that get used in gas production, which again from over the last 5 years up till 18 months ago had been shrinking. Now with all the Western countries trying to boost production, the demand from that sector is going through the roof. In the stainless steels, in the first part of the year, even with all the craziness around nickel prices moving higher, and you're thinking, oh, okay, this is when you would shift towards the lower nickel or no nickel type stainless steels. in China, the one class of stainless steel that production grew year over year was in the high nickel 300 series stainless steel. So, there's still that's always been one of the strengths of stainless steel, is it's not, it's not 3 or 4 applications. It's a very diversified, sort of basket of activities. And so if consumer goods is slowing down, infrastructure might be moving full speed ahead, or transportation, or, government, other sort of infrastructure type stuff. So yeah, no, it's again, that's what contributes to the fact that stainless steel has grown at 5 to 6% a year, for very long periods of time, and we don't see that slowing down anytime soon.
Yeah, interesting point there about the 300 series, 400 series, different use applications here, and it's worthwhile going through these conversations. And we haven't talked about 300, 400 series for well over a year, maybe even 18 months, and you kind of, we go along a conversation, and you suddenly realize as investors are just coming into this conversation who do, write in and say, hey, what about nickel being designed out of batteries, and you kind of have to, remember they're starting, they are where we were at the beginning, and we're having to re-educate those audiences. Yeah. And, likewise today, talking about the fact that, 85% of the world's nickel is used outside of the EV thematic, and going forward, it's not a case of the EV cannibalizing the nickel uses outside of EV as a percentage. It's just all the numbers are growing. All the numbers are growing. Percentages may change, but the volume numbers will only increase. So that's interesting times, and nice to see some of these new investors looking in and even thinking about it. So that's good news. Hey, I'm again conscious of your time because we haven't got much more time. Let's have a blast through some names. We'll start with Canada Nickel. Have you heard of them?
Yeah, so we're quite happy with the resource update. That basically doubled our measured and indicated resource, over 2 billion tons of resource in all categories, and 1.4 billion tons in a measured and indicated. And again, the benefit of that is when you get a feasibility study done, it's that portion of it that converts into a reserve. And we're on track to be into the upper half of, we had been talking about 1.3 to 1.8 billion tons in a mine plan, and we're on track to be in the upper half of that range. We're still waiting for a bunch of assays that hadn't come in, and we're now one of the top 5 nickel resources globally, on a measured and indicated basis, which again, pretty excited about, and have done all of this, from hole 5 in less than 3 years. So, again, I think it's a tribute to our team, and a tribute to the deposit itself that's been able to generate, this kind of resource base. We also saw a bunch of other resources come out. Chalice, which is, been hugely successful over the last 4 years. They improved the proportion of their resource base that's indicated up to 2/3 of the total. Their overall resource actually didn't increase that much, which I was a little bit surprised at. It was only up by 5% or so. But again, people are probably getting tired of me droning on about all we need all the nickel and how hard it is to get sizable quantities of nickel. But initially this was seen as a sort of a nickel copper PGM story. It's actually morphed very much more into a PGM story. So if you look at the resource, their average nickel grade is 0.16% nickel, and they have just over, they have about 1/10, the amount of nickel, that we've got in Crawford, like 9 million ounces of PGMs. But it's really now a big new PGM discovery as opposed to a big new nickel discovery, which is unfortunate because, as I said, we do need all the nickel. Poseidon Nickel, which I've mentioned a few times, they've got it was probably the highest grade operating nickel mine that's operated in the last 50 years. But it also has a smaller disseminated, larger relative to their resource base, disseminated deposit with a mill that's sitting right there ready to go. So, it's one of the few restarts that are out there. So they had a 35% increase in their resource base up to about just under 30 million tons at 0.6. And so, they've got a total resource there now of about 80,000 tons of nickel in total. So again, in terms of the scale, it is in nickel, hard to really sort of build out a resource base. A new name I haven't really looked into too much, but they picked up what was a former Outokumpu property up in Scandinavia and published a resource as they're coming to market of about 134 million tons, sort of 0.2 nickel, and just under 0.01 copper. So cobalt. So kind of sort of similar grades to some of the other ultramafics. We've talked about some of the benefits of ultramafics with the potential for carbon capture and so forth. So I again don't know much about this company or the team. Just noticed the resource come out, but again, it's good to see another news story out there in Scandinavia is definitely perspective for good nickel deposits.
And you mentioned we sort of headlined Brazilian play as well.
Yeah. So one of the things that we need to help unlock some of the resource out there is some new processing technology. So nickel generally to process the limonite layer, which is lower nickel to iron than the saprolite layer, which is used to make ferronickel. Traditionally, the way to get the nickel out has been HPAL, which we know in the West has been an extremely expensive, not always very successful way to process nickel. And so one of the this company is private and has been able to raise money privately through Along, which I'm very jealous about. Has started up commercial production has reached sort of commercial production on their pilot plant scale heap leach operation in Brazil. So again, we're keen to watch that happen. Heap leach is always a great way to extract materials if the chemistry is right, if the material allows the acid to come through. I don't know if the specifics, for this particular region, but one of the tricky parts with heap leach is if you're in an arid or semi-arid area, that's fine because you're adding the water and not much water is coming from the environment at any point in time. In places that get monsoon levels of rain, and generally laterite deposits form in the tropics. That's the reason they're there. So they typically end up with great buckets of rain that come every once in a while. So which can make it challenging to try and maintain, balances and so forth. So, something to watch. Again, private can't access it, but we'll see if other companies emerge and if this technology works. Looking in public vehicles to do it. So keep an eye on it. Something I'm definitely be keeping an eye on it. We can talk about in the future.
Okay. Well, I'm going to wrap it up there because you got places to be. So I appreciate you making the time to see us this morning. Some interesting topics discussed there for sure. Maybe we can pick up on some of those next week with regards to some of the grades from some of these other projects going on else out there, and also the different kind of use cases for nickel specifically, because EVs part of the solution, but at the moment it's quite a small part. The rest of the industry hasn't gone away, and the demand definitely is there. So, Mark, appreciate your time today.
No, thank you, sir. We'll talk next week.